This is actually the name of our new product that we are going to release here in Luxembourg. And this little piggy is helping us, our team, to put the product together and to market it a little bit. I'm Denis Kiselov. My company, SnapSwap, has the first license, payments license in Europe that allow us to provide services using digital technologies like blockchain, consensus ledger, smart contracts. I just moved to Luxembourg from San Francisco a couple of weeks ago with my family. So now I'm living here and I'm building our... Can you hear me now? Okay. So I just moved from San Francisco to Luxembourg with my family, and I'm building the business here and living here. And it's actually a very exciting place and very exciting time. For me, Luxembourg has a unique quality of combining financial tradition of financial services and banking with a very open mind to innovations in financial technologies. And I see it working with our partners in large Luxembourgish banks, and I see it in the incubator that is supported by BNP Paribas, where we are the members now. And I saw it in our discussions with the regulators here in Luxembourg, with the CSSF, because it took us a long time to go through the licensing process, and we learned a lot about the regulation and compliance. And we found the regulators also interested in learning about our business model, what we are doing, how we are doing, and how we can put it together in a compliant and well-regulated way. We are a company working in financial services. My personal experience is 20 years in banking industry. I started in Washington working for the World Bank and then moved all around the world working in different institutions. But my degree is in computer science. I learned computer science in the university, and I was always interested in the engineering, in the technology, and how stuff works. So that's how I became interested in cryptocurrencies and crypto technologies. And that's what brought me to where I am now, to build the services based on blockchain and technologies alike. But speaking about our company, SnapSwap, we are not a blockchain company. We are a service company. Our goal is to build services that are useful for our customers, that makes their life better, that allow them to interact with the world and to transact financially. And for us, blockchain is just a choice of the technology that we are using in our product. And we found this technology to be very useful. So let me tell you about the product that we are bringing to the market, and let me tell you why we use the blockchain technology to build this product. So, what is the service that we are building? For whom we are building it? Actually, I'm building it for myself and for my son. My son is in school in London, and we often communicate with him while I was in San Francisco and while I'm here in Luxembourg, but we almost never talk over the phone. Usually we do like chat messages, we use WhatsApp, we use Viber, we use chat functionality in Skype, so it's always like this. We're talking by hands, not by voice. And sometimes he asked me in the chat line, Dad, can you send me 10 pounds? I want to buy pizza. And here I stop because I have to exit my application where I do the chat, and I have to go to the different online bank, and I have to remember payment details and how to send it. So it's kind of very disruptive, and I always, at those moments, I always saw that how nice it would be to have the functionality right there in the chat line, to click and say, here's your money, enjoy your pizza, and have it instantly delivered to him, to London, and not overpay for it. And that's exactly what we are building. We are building the service that would allow our customers, that does allow our customers, to interact with each other in a familiar framework, in a familiar environment of online social communication, and at the same time, in the same framework, send money, receive money, lend money, do all kind of peer-to-peer transactions. That is, we are doing that because we consider financial transactions as a kind of exchange of information between people. When you are sending money to somebody, in fact, you're saying, happy birthday, or can I help you, or it was a nice dinner, let me share the expenses. So it's part of the communication, and why shouldn't it be included in the communication stream, in the communication environment? That's for peer-to-peer, but on the next stage comes the merchants. And like today, I can find on my telephone and my address book my son and send money to him. Tomorrow, I will be able to find Nike and send a chat message, say, look, Nike, do you have any new running shoes for me? And the automated system supporting the communication with the customers will respond, yes, Dennis, I have something for you that you can use in the rainy weather in Luxembourg and still be comfortable running around. And I will see the color, I will see the size, and I click, I want it. And the transaction should be happening right away. Just a payment processed, and the goods are delivered. And for merchants, it is the new way to communicate, to get engaged with the customers. It's not so much about cost savings. It's about promotion, it's about communication, it's about building loyal customer base. So that's in a nutshell the service that will be available in a couple of weeks. We are now in the final stage of testing, and soon we will be distributing invitations for the service. We will launch it in Luxembourg, extend it to Europe, but potentially our goal is to open it worldwide, to open it to all the customers in the world who want to do the transactions and to benefit from cross-border, cross-currency transactions, real-time, with very, very, very low cost. That's the experience that we are building. And to build this, we need several components to be in place. First of all, processing of the transaction. We need to have an engine that allows us to process transactions, cross-currency, in real time with a large number of accounts within our single ledger. But there are other components that we also need to deliver this service. And two major ones are onboarding and risk management. They are not relevant to the blockchain that we are discussing now, but those are important parts of our services and of our integration. Like for onboarding, we put together the technology that allow customers to open accounts and to go through the verification procedures on their mobile phones. So it is available, and you don't have to come anywhere to identify yourself and to create the accounts. And it could be done within about 6 to 10 minutes with full verification. And we know a lot about our customers because we have their mobile numbers. We know what is inside their mobile phones. We know where they are. We know what time of the day is there. So it's a lot of information that was not previously available for standard KYC purposes. Speaking about risk management, the large wealth of information that we have on our customer also helps us a lot, because using all this information, not only transactional data, not only personal information, but also device information, geography information, behavior information, we are building quite large machine learning models that allow us to automatically identify anomalies in the behavior of the customers. So our goal is to prevent fraudulent transactions, to prevent suspicious transactions, to stop them before they are happening, not after. So those are major components that we built in order to deliver this simple and very light user experience to our customers. Now, let's get to the core. Let's get to the transaction processing. For processing transactions, we need a ledger. Everybody needs a ledger, any financial institution. For a couple of 100 years from the old Italy, all the transactions are recorded and processed on ledgers. Traditionally, every bank has its ledger. Your bank has its ledger. And the way it operates, it is used mainly for recording the money that are coming from outside, from like payment networks, SEPA, SWIFT, what have you, and for recording money that are going outside and keeping the balances inside the ledger. And the ledger is usually updated periodically, once in a while, to record all the transactions that are there. We needed a different kind of ledger. If you could imagine that all the customers, all the residents in Luxembourg have accounts in one single bank, in your bank, and all the merchants have the accounts in your bank as well, that means that most of the transactions that are going in Luxembourg are happening inside the ledger of your bank. The money are sitting on your accounts, and you just need to have a very efficient system to record the transactions inside the ledger. And the outgoing and incoming transactions are not that important anymore because most of the business is inside the ledger. That's the kind of ledger that we can build using blockchain as a technology. And this is a different idea, the different kind of ledger. When Mike discussed and explained how the Bitcoin ledger works, that's basically one ledger where you have the accounts of all people in the world, potentially. And all the transactions are happening not between different ledgers, not between different banking systems, but inside one big ledger. That's the advantage that we have in using transactions. Now, ledgers built on blockchain technology can handle any kind of assets. They can handle cryptocurrencies like Bitcoin, like Litecoin, like Ether. They can handle property rights. They can record the documents. We are interested in putting real currency on the ledger. Dollars, euros, British pounds. And here we come to the world of compliance and regulation. And that's why we started the process and finished the process of acquiring this payment license in Luxembourg. Because in order to work with fiat currencies, with real currencies on the ledger, you have to be a licensed issuer. You have to be a regulated entity that is responsible for anti-money laundering and for knowing your customer. Your funds have to be backed by the resources in a reputable bank. It's like electronic money, the same kind of regulation. And you have to be audited and supervised. So we are exactly this kind of company in terms of our regulatory status. We can issue and operate real currencies on cryptographic ledgers. So, summarizing, why blockchain? Because it's very easy to build large ledgers using this technology. We have a small but very dedicated engineering team that allow us to maintain the ledger that can handle a very large number of accounts with very high speed. It is real-time transaction processing. That is important for us. In our system, we need transactions to happen when they are initiated, and either pass or fall. We cannot have transactions pending. We cannot have transactions hanging in the air. That's what we can get from this technology. We can easily scale it up to the needs that we have. It's technically very easy, and it does not require additional work, additional development. And finally, it's connectivity. And connectivity is important for our product and for our approach. Because when I said that the transactions for a customer are happening in the messenger, that means that every single transaction that is happening on the ledger, we connect to the message on the messaging layer. So you can think about it as two layers of communication: financial transactions and messaging. And every financial transaction is a message, but not every message is a financial transaction. That's how it works, and that's why we need this technology. This is our product today. It's almost ready. You can go to our site, snapswap.eu, and sign up for the invite. But let's think what's coming next. What are the next opportunities? What's interesting? What we and other companies like ours can build using these technologies. And I would talk about three different ideas. One that is practically happening now, one that is very near future coming, and one that may sound a little bit futuristic or like a science fiction, but it is also coming, believe me. So the first one, payment as a function. What do I mean by that? The payment functionality is becoming just a button in the application. Like now, you have a voice call button in the application. Voice call is not the service anymore. It's just a function within Facebook or within WhatsApp or within Viber. You have a communication tool. You use it for your purposes, and there is a button, call. And you go and you do voice call or video call. The same is happening with financial transactions. In messaging, in social networks, in other communication tools that people use, soon you will have this button, pay. And you will be able to send money to your audience. You will be able to make donations, to commit to the cause, and you will be able to do it at the very, very low cost and practically instantly. So when something happening on the other part of the world and you know about it because you read it on somebody's Facebook page, you will be able to click and help. You will be able to deliver funds, and it will cost practically nothing for you. We would like to be behind this button. We would like to be the company, the ledger, that is handling those transactions. And we have all the capability to deliver it, because the way we are connected to our messaging environment, we can easily connect to any other messaging or communication environment. So the next thing is coming from the regulatory side. It's a European Payment Service Directive 2. For us, the most important part of this new regulation is the fact that it does create new category of financial services, of financial companies. They call it third-party payment service providers, and they have it in two categories. One are the companies, they are called payment initiation service providers, and the other account information service providers. What it means in practice? It means in practice that with this directive in force, there will be possibility for a third-party company providing services to the customer to access customer account at the bank, like in your bank, and initiate a payment on behalf of the customer. And also it will be possible for the information service provider to take the information from the account and to deliver it to the customer in the familiar framework of the application. It sounds very easy. Definitely there are some risks involved, because as a bank you have to find out how to control who is having access to the accounts and whether they are good enough and whether they are secure enough. But what is interesting for us here, that it would allow us to integrate customer accounts in other banks, not only the balances that they have now in our application, but also the accounts that they have in BNP Paribas, and to operate with those accounts, and to send money from those accounts and receive money from those accounts. That means that technically it is becoming possible to create alternative payment networks. Because if two customers will be using our application to exchange money with each other, that means that those payments will be processed by us, by our ledger, and not by SEPA. And we can do processing much better. We can do it specifically for our customers. And moreover, it sounds maybe a little bit too ambitious to say, but I'm sure that there will be other companies who will be competing. The thing here is to open the market for the competition. And where competition comes, there comes a good quality of services, there comes a low price, and the fast transactions. So we are looking very much to it, and we would like to be one of the companies that are working with banks, delivering the services, delivering this connectivity, and making it happen, and bringing this service to the customers. And the final thing, it's a little bit far remote, it's Internet of Things. When I was in San Francisco, I took a test drive with a new Tesla. And I found it amazing because the car drives itself. Literally, I don't have to touch the steering wheel because it goes straight, and then it can change the lines. And the car can do a lot. But that means that in the near future, you can have a bank account, not for you, but for your car, because the car is smart enough to handle financial transactions. And you can have bank account for a commercial drone that is flying somewhere around and selling the services to the cars. So there will be interaction, not between people, not between humans, but between devices, between smart devices that are equipped with artificial intelligence. And those devices will need very special system for settlement, for payments, because the payments will be very, very, very small. Usually there will be micropayments. They will have to be instant, and they will have to be final. And they will have, and whoever provides this infrastructure, those accounts, those payments, will have to have APIs that are available for developers of those devices, for developers of those systems, so they can easily integrate with it. And in terms of number of transactions, this kind of banking, this kind of payment can be an order of magnitude larger than all the transactions that are happening now on networks like Visa and MasterCard. With the technology that is created on the base of the blockchain ideas, algorithms of processing the transactions that Michael described in the details, we can build this service. We can deliver it to the customer, and we can integrate it with traditional banking. So that's all on my side. This is address to sign up and try the service. And at the end of the presentation, let me bring back the slide from Michael's presentation with the predictions of the future. I think it's a good idea to have it in front of you and to allow everybody to ask the questions.
So thank you very much, Michael. Thank you, Dennis, for a very, you agree, extensive and complex presentation. Now, as I mentioned at the beginning, maybe you didn't get all the ins and outs, but I hope that you have lots of questions. So can I ask the audience, what are your questions?
I have a question for Michael, and apologies if it is the 500th time that you get the question, but let's assume that on the volume of transactions chart that you showed at the beginning, the number was indeed much higher because of broader acceptance and so on. And having heard about the difficulty, the computing power that you need to calculate and to validate, what would be the consequence? So would it still be fast? Would it still be possible to manage at a global scale? And what would be, let's say, that we can imagine the size of this total ledger, which increases with each transaction? Would we not at some point reach any practical limits?
The blockchain community in general now is struggling or trying to work out the answer to that question. We're part of it. We have a fundamental transaction limit on the network today of 7 transactions per second. And 7 transactions per second for anybody in the professional industry is not a very big number, as I've said before. In fact, we're about halfway to that level already, and with the number of transactions per day, it's nowhere any good. So naturally, that has not escaped the attentions of the developer and the community around that, because there's no way we can have an industry that's so small. So there's a lot of discussion and consensus building within the community as to how to develop the protocol, how to develop the technology to do that. And the first thing that is being agreed is an increase in size of this famous block to cater for the transaction numbers which are going to come in. The good thing about computer technology is we haven't yet seen an end to this famous Moore's law, which is this idea that computing technology doubles every 18 months or something, which was invented by Mr. Intel man way back then. I'm not sure it's a law, actually. They call it a law. A law of physics is something which is irrevocable. This has more been a historical fact, and it doesn't show any sign of things. So we're going to get more processing power onto the network, for sure. The protocol is going to be lightened for smaller transactions. It's a very heavy protocol today to compute this thing. It's very inefficient. The cost of the network is managed all the time. It's self-correcting. And it generates about $1 million a day in fees. You work out, if somebody's going to be working very hard to verify transactions, they do it for economic reasons. They're not doing it for the hell of it. And you look at the transaction payment fees which are available on the network against the cost of that, and there's about $1 million a day in leftover money to be distributing against the fundamental costs of electricity and computers and stuff. So the answer to your question is it's a very real thing, is how do you scale technology? And it's something that people are working on and recognize and will and want to do. My goal is as Dennis is on the IoT side of things with devices, you know, charging and paying small amounts of money to interchange information with each other. One of my big things is, or my beliefs is, that the digital media industry can be one of the first ones to benefit from that, so that when we want to go read an article on a newspaper, instead of having to subscribe to the newspaper, we're running it out of a sort of a wallet which is running directly into our bank account, but with a microtransaction, which is uneconomic today, impractical today. I think within a year we're working on it now. We're developing something called, it's a long answer, isn't it? I'm sorry. I'll stop.
I'm Ramon Hoyos. I have a question for both of you. Do you think that I gather from your presentation that blockchain is really powerful, as it allows, in summary, could allow you to create your own money. Do you think in the future dollar will be competing with Amazon dollar or Facebook euro?
The money always are related to trust. But there are also trustless money in the world, and Bitcoin is probably the first example of trustless money, because you just have them on the network, nobody holds them for you. There are other cryptocurrencies that are being created on the steps of Bitcoin, but still there are major currencies in the world, and they are trusted currencies, and they are handled by trusted institutions. So our goal, for example, through our regulatory engagements, through our status as a payment institution, through our auditing and compliance requirements, to build this trust in our customers, to make sure that they take euros and pounds and dollars that are stored on our accounts the same as dollars and euros and pounds stored in any other bank.
My belief is that if you have to put money into a different system to do something, then it's a tremendous customer barrier. So buying your credits for Candy Crush or something like that means you're sort of taking money from one thing and creating a Candy Crush account or whatever, or an Apple Store account or something. And that seems to me to be an inefficient way of operating. So creating lots and lots of different digital currencies to basically just confuse the customer doesn't seem very useful to me. What I can imagine is we find a digital currency form which is more suitable, for example, for drones and devices, which operates as a speciality that I don't know what it would be, but as a speciality for a very different purpose. And all the drones in the whole world use this kind of currency because it makes a lot more sense. And that's sort of the Bitcoin idea. Is Bitcoin's probably the wrong one for it because of the speed and issues around that. But Bitcoin all the transactions happen within this environment, and when you have to interface into the normal world, the regular world, you have to convert your money, and that's just inefficient. So I think we see specialist currencies for specialist needs, but more and more.
Do you think now the relationship between the blockchain community, the startup, the technology guys, and the banks, is it more like the technology guys are saying, okay, look, this is how we're going to teach you, how we're going to see the involvement? Or it's more the other way, like the banking guys will say, oh, hey, please come up with something new, come up with something easier to understand, come up with something we can really use it. or something at least interesting, like the Internet of Things and blockchain? Which do you think is more like the direction between the cooperation between the two communities now? Thanks.
Do you want to take it? Okay. Speaking about relationship with banks, it depends. What we see is great interest on the side of a number of major players in the financial services to new technologies. And one good example is Lux Future Lab, the incubator that is created by one of the world's largest banks, specifically to host startups and to allow startups to integrate, to talk with banking people. That's what we are doing here and now. So that's what we find. It's definitely not the case everywhere. And having experience building business in the United States, I would say that the relationship with banks could be quite tough sometimes. But we see the world changing, and we see that the banks are driven by their survival instincts. They see the new opportunities and new challenges. And we are here to be the first one to try it out and to present it to them.
And I think on the outreach, there's a couple of ways around it, ways to describe it. One is on the technology, which banks use internally within themselves. Obviously, banks have been at the forefront of IT technology forever, and indeed new services, trading platforms and things. The fastest and best trading platforms in the world are running in the banking industry, no question about that. And they're pioneering a lot of the artificial intelligence and things which is happening for trading. As soon as you can make money in trading, I mean, people put resources behind it. So that's one side where the technology is coming in. The second side is the sort of consumer product side, the sort of thing that Dennis is building, which is a second thing, which banks are a part of that environment, just as the phone companies were part of the telecommunications revolution, but not driving it. They've been driven by it a little bit, but there are opportunities for them in that. And then the last thing is where you can get new consortia building up. So what we're seeing with our 3 and digital asset holdings and things and trading platforms on NASDAQ is they're building a new way of interacting between each other, new clearing houses, new settlement systems that perhaps work a slightly different way or a very different way to the ones we know today. But what they're driven by is removing these middlemen. Middlemen in markets have historically, in any market in history, have been the first persons to go out of this. So if I'm sitting in something like, I don't know, Swift or something like that, I'm probably a lot more worried about this stuff than somebody with retail customers, for example, who need to change.
We talked a lot about transactions and fees and payments. As we all know, it's about 3% of the GDP in Europe, and it will be reduced, hopefully, with half, thanks to regulation and market competition. I wanted to ask both of you about non-liquid assets. Where do you see the low-hanging fruits in the cost of handling the paper trail in digital rights management? Wealth funds are also starting to investigate the possibility of reducing costs, indirectly reducing the manpower invested in handling the paper trail. What's your comment on that?
When we want to swap or trade something, you need to have that trust between the parties, and an auctioneer or somebody like that is a middleman, is an escrow agent, and all these people. They're sitting in that trust setup. If I want to buy shares in Deutsche Telekom or some BMW or something, I go to my bank to do it because I don't know who else to go to. They're my local thing. If I get access to these, if I've got access to a trusted resource or a trusted database, why would I go to somebody else to do it? And I think we see people building up a lot out of that. We're seeing it on trading in general now. People are committing their transaction, and it's committed. And this stuff is committed. That presentation, we could go through it even more. We look at every single detail, and they can go back forever if this thing lasts forever, and find that document on this thing. And the fact that I transferred this asset to you, or the fact I produced this, I'm personally very interested. My daughter's an artist, and she works with digital asset. Everything is digital these days. So how do you produce something like a first edition, which is something the old artists did, in a digital world when all copies are identical? Well, you also have to do it with a timestamp, and you have to have the timestamper record on the thing that this was the copy that was produced on that day and that time, and it was the very first one, for example. That's what you get with an asset, with a register, which is undefeatable, whatever, if that's the word. I find those sort of things extremely interesting for the future.
Looking at the fintechs, or you can also answer, Michael, that are around, the problem is always how do they get their customers, their clients? And how do they get critical mass? And taking your example or your initiative, first of all, who will be the end customers? Will it be the clients? So will it be B2C? Do you see B2B? How do you intend to acquire your clients, or will you make alliances with financial institutions?
Definitely, we are looking forward to build alliances with financial institutions because we see the cooperation mutually beneficial. And in terms of our customer base, first of all, we are targeting the international class, I would say. When I say that I build an application for myself, to a large extent true. People who have assets and liabilities in different countries, on different continents, have friends and families all over the world, and need to transact globally and need to move money and pay internationally. But speaking about the customer acquisition issue, I would bring two examples. One good example is Skype. When Skype came to the market, everybody knew that international call cost money. You have to pay for calling internationally. And then came Skype and said, look, guys, you can speak for free with each other. Of course, you have to go create an account. The quality initially was not excellent, but still it was very compelling value proposition, free international call. Same happened with the messaging application called WhatsApp. Before WhatsApp, everybody knew that to send a text message from one telephone to another costs some money. When you subscribe for a provider, there was always how much does it cost to send a text message. And then came WhatsApp and said, look, you can do it for free. You can send money from one device, or you can send message from one device to another, and you don't pay for it. And they didn't put practically any meaningful money in marketing, because the value proposition was so compelling and the distribution happened virally. We hope for the same kind of thing, because what we are bringing to our customer in a very basic environment is the way to transact internationally, cross-border, cross-currency, practically for free. You can load money and it's free. You can send it within the application, it's free, and you can download it to your bank account or to your card, and it's also free. So we hope that it is very compelling value proposition, and it will bring the viral distribution to our application. We're starting initially with by invitation only, but whoever get the invitation will be able to issue 10 more invitations to other customers, to friends and family to work with. So that's what we're doing.
In the investment industry and the internet today, people are spending tremendous amounts of money on customer acquisition. I'm sure you're the same. We know that on Google, the most expensive AdWords are financial-related words, words like mortgages and insurance and stuff like that. People paying a lot of money to get traffic down these links. Nevertheless, there are products in the financial world, and the thing that intrigues me most, and perhaps you can look at it yourselves, is a product by the Danish bank, the Danske Bank, called Mobile Pay, which I go around and show a lot of people. It's not a startup. It was developed by the Danske Bank, which is the largest bank in Denmark. And it allows people on their mobile phone to send money to each other, not just within the bank, but with all the banks within Denmark, and it happens instantly. They made a very easy-to-use user experience on that. The interesting thing for me is, in the last 3 or 4 years, is the adoption of that product. And of course it started with, the normal early adopter people. But now it's solving problems for the farmer who wants to sell eggs at his, the entrance of his farm and all of this stuff. Instead of putting the cash box there, he's putting his mobile pay, his mobile phone number is what it is. It's the reference number. And you can spend small amounts of money between each other on that system. And the interesting thing is the adoption. I think now they've got 3 million users out of a 6 million population. And that's pretty much mainstream, I would say. When you're going to village markets and farmers markets, and how often you go to the market here and the guy won't take you, he doesn't take cards. How many sales does he lose because he doesn't take, you don't have enough cash in your pocket, right? We've all been in that situation. You go to a flea market and find some magnificent thing you want to buy and you don't have €100 to buy it, and then you can't be bothered and it all goes away. Mobile pay solves that. But the adoption of that product, and that's from the traditional banking industry, developed on the process of an RFP and all of this kind of stuff, the way, it's not a startup thing, it's done properly. And people seem to love it.
Time is speeding, so we have not seen it flying with a very interesting discussion with you, a very interesting presentation. I think we all learned a lot. So I would suggest we give a big applause to those two.